In today's video, I'm going to share my DeFi and airdrop farming strategies on Coinbase's base chain for April 2024. Welcome back to Dynamo DeFi. My name is Patrick. As a reminder, everything in cryptocurrency carries risk, and nothing I say in this video is financial advice. You should still do your own research before trying any of these strategies. Now let's get into the video. To start, why am I farming on base chain at all? Why do I think that this chain has potential? Base, if you're not familiar with it, is built by Coinbase, one of the largest crypto exchanges in the world, and it's an Ethereum layer 2 rollup. So you use ETH as gas to pay for transaction fees. You can deploy applications on Base that you could also deploy on Ethereum, but it's significantly faster, significantly cheaper, although it is more centralized since it's operated by Coinbase. That being said, I think because Coinbase is putting their weight behind it, they've already said that people will at some point be able to buy tokens on Base directly from Coinbase. I think that it's got a good chance of doing pretty well, and its growth this year has already been very impressive. If you look at their DeFi ecosystem, they already have nearly $1.5 billion deposited, up from around 400 million at the start of the year, and up from zero in the middle of last year. Additionally, the volume in decentralized exchanges on Base has skyrocketed in recent weeks, hitting a peak of $656 million at the end of March, up from only $20 million on some days in February. If you look at the entire chain itself, Base is now the third largest Ethereum rollup with over $5 billion of assets deposited onto the chain. So in other words, Base is growing a lot, and one of the largest exchanges in the world is putting their weight behind it. So I think it's a pretty good ecosystem to look for opportunities on, and I think that there's a good chance that at least in the long run, more money continues to flow into this chain. And so what exactly am I looking at? Well, I'll divide this video into a few different sections. First, I'm going to talk about some DeFi strategies to earn yield on Base. And then I'll also talk about some protocols that don't yet have a token that you may be able to earn or qualify for an airdrop on. All right, so first let's talk about yield. Number one, best place to earn yield on Base chain is going to be Airdrop. What is Airdrop? Airdrop is the leading decentralized exchange on Base. They also brand themselves as a trading and liquidity marketplace. But basically, Airdrop is where you would go to swap a lot of tokens on Base, and it's also where you can go to earn pretty good yields, in fact. So to give a perspective for how good the yields are on Airdrop right now, you can pair ETH and USDC and currently earn 55% APR. So that's 55% interest rate on what's a blue chip coin and a stable coin, and one of the sort of most audited backed stable coins. CB ETH, so Coinbase staked ETH, and wrapped ETH is 22% APR. So basically two different kinds of ETH, and you can earn 22% on that, which is just extremely, extremely good. If you want to hold the Airdrop token itself, the rewards are even better. 126% when paired with wrapped ETH, and 217% when paired with USDC. And note that Arrow is inflationary, even though it's performed extremely well so far year to date. It is inflationary, so keep in mind if you're holding that for a very long time that you may be diluted. But yeah, so this is the number one place that I'm going to farm on Base, is just to either earn yield on my ETH here, or maybe even to accumulate some Arrow tokens. Since there's no coin for Base, oftentimes the leading DeFi applications, their coins act as the proxy token for the chain. And so I think Arrow has kind of acted as the proxy token for Base so far. And I have a full tutorial on how to use Airdrop if you want to learn how to use it yourself. Next DeFi application that I'm looking at on Base is Seamless. Seamless is a money market, and they have also very good incentives right now. You can receive escrowed SEAM tokens, SSEAM, for lending out funds on here. And a lot of these pools have rates in the range of 20 to 30% on blue chips. So ETH, you can earn 26.1% on Base, on USD base coin. So USDC, basically, you can earn 25.93%. On Coinbase wrapped ETH, you can earn 25.82%, and the list goes on. So you can deposit these funds on here and earn what's basically just escrow tokens for this protocol, but what comes out to be a pretty high reward. And now note, when those tokens eventually become vested, they may not be worth what they are now. So you got to be careful with this. But also, you're not required to buy anything, right? The risk you're taking on is smart contract risk, or the risk of this protocol being exploited. They also have this interesting integrated liquidity market strategy. And basically the way this works is you deposit wrap staked ETH, they borrow ETH, they convert that to wrap staked ETH and do a loop like that. And by using leverage in this way, they are able to achieve an APY that is rolling over the past 30 days as 504.74%. And a couple things I want to note about this. First, I doubt this APY lasts forever because yields like that rarely do. Second, strategies like this that involve leverage always carry risk, even if there's protections against it that are supposed to, for example, unwind the position in the event that they need to. Things can go wrong, even things that are unforeseen. I've seen it happen so many times in so many different protocols. So understand that you are taking a risk to achieve this yield. However, if you're willing to take that risk, then the yield is quite high. Next protocol that I'm interested in on Base is XtraFi. XtraFi is a leveraged yield farming platform. So basically you deposit your funds, more funds are being borrowed, redeposited into the farm. And so because of this, you can achieve yields that are sometimes 2, 3, 4%, 4x higher than what you would achieve solely by depositing. And so, for example, wrapped ETH USDC can be converted from 72% to 196%. And this is, generally speaking, these strategies are using Airdrop on the back end. Now, a couple things to note here is some strategies, the pools may be full because they have caps. And second, some of these strategies, you may need to hold the XtraFi extra token. You may need to stake those in order to access the strategy. So that's sort of how they give value to their token. And if that's the case, you'll just have to do the math on whether, depending on how much you're depositing, whether it's worth it to actually buy the tokens to access the strategies. Now, a couple quick warnings here. First off, when you take on leverage, you do take on the risk that you could, in theory, be liquidated. So understand that if you're going to use any of these pools, that you need to know your liquidation price, and there could be a real risk of losing some money if you have periods of volatility or sudden dips like we've had recently. Second, whenever you're depositing into two protocols, you're taking on the smart contract risk of both protocols. So in this case, Aerodrome and Extra Finance. And so if something goes wrong and either of them are exploited, then you would probably be in trouble. But part of the reason why I really like XtraFi, and that's on this other tab here that says lend, is they also have really high rates for lending. So in this case, you're not doing the leverage yield farming. You are lending to people that are doing leverage yield farming, and you can get single-sided, pretty high APYs here. For example, 90% on single-sided Arrow. Not too bad, all right? On stablecoins even, you're looking at 25 or even 52% on single-sided stablecoins. Now, quick note on stablecoin farming. I know I sound like I'm giving all these warnings, but I want to make sure people understand. Stablecoin farming, it's still money that is at risk, right? Stablecoins are not for risk-off money that you're taking to the bank, right? Because smart contract risk is real on a lending platform. Bad debt is a thing. And so stablecoin farms are maybe for money that is still risk on, but for whatever reason, you are between trades with it. It's out of the market right now. But yeah, I think XtraFi is pretty interesting for this, especially this Arrow farm. For me, this Arrow farm is very, very appealing. All right, so now let's talk about some potential airdrops on Base. First up, we have Cygnus Finance. Cygnus Finance allows you to mint a treasury-backed stablecoin. Pretty cool. Backed by US treasuries, in case that wasn't clear. The APR here isn't great, 5.3%. Well, not great for crypto, at least. But they don't have a token yet, and RWAs are kind of a hot narrative right now. You have Ondo, for example, is probably one of the better performing major tokens of the year. I mean, it's doing pretty well even in this current dip. And so what you could do with Cygnus, if you wanted to put some stable coins to work, you could deposit some USDC in here and mint CGUSD. And you're going to both earn rewards from treasuries, and potentially, if Cygnus does an airdrop, you may qualify. The next potential airdrop on Base is Astaria, and Astaria has an ongoing points program, which I would say makes it very, very likely they have an airdrop eventually. Not every points program eventually converts to an airdrop, but more often than not, they do. And Astaria is an Oracle-less, intent-based, fixed-rate lending protocol with unlimited loan durations for any asset. And they have a pretty stacked team. They have someone who was at Ondo as the CEO, and the CTO is Joseph DeLong, who was an Ethereum core dev and previously was the head of Sushi, which at the time was one of the largest decentralized exchanges. And so they've got the team, they're on Base, and they've got the points program. How exactly does it work? Well, they have these things called intents, which are basically you could think of it almost like a request, right? Where this person is offering certain loan terms in terms of collateral, APY, and borrow, and then you can choose to fulfill those terms, to agree to them. And what makes Astaria different from a traditional crypto money market is they use these things called intents. And intents is, I would say it's a technical narrative that's gaining a lot of traction, at least in terms of which protocols I see people interested in investing in. And that's because it lets you do cool stuff like this. So how exactly do intents work? Basically, in the case of Astaria, intents are a loan agreement proposal that matches prospective borrowers and lenders. And so there's a fixed rate, there's the fixed collateral, the fixed token that you're borrowing. And the way that it works is when your request enters that intent feed that was just up on the screen, potential borrowers or lenders have 24 hours to fill the loan, and if filled, the loan executes automatically. And during this 24-hour period, the borrow intent starts at an APY of 0%, and then it increases continuously until a lender decides to accept the loan term. So it's like an auction, basically. And note that a lend intent does not adjust during the 24-hour period. And then once it's live for 24 hours, a lender can recall the loan. And so, again, they have a points program. If you're looking to either lend out funds or borrow funds on Base, then I think that this could be a good way to qualify for a future airdrop. Another protocol that has a likely future airdrop, in fact, this one I think is pretty much confirmed, is IntentX. IntentX is a perpdex on Base, and perpdexes, as we know, are one of the most profitable business models in DeFi. And there's a few things you can do with IntentX. First off is they have a ZLA campaign that's live, and they're giving out some rewards, including, well, again, the airdrop's pretty much confirmed. They're saying that you'll get tokens on token generation event or USDC. So you can check out the ZLA reward. This is just from a few weeks ago. They've also confirmed that they are going to have a token here, and they've confirmed that some amount of that is going to be for trader incentives. And so the other thing you can do is you can actually trade on IntentX. You can see that it's a pretty sleek interface here. It looks like a centralized exchange, and they have this points program, and they advertise you can earn X IntentX as you trade. So if you're doing some trading on Base, maybe you want to check out IntentX, see if they have some pairs that interest you. They have a lot of pairs. So some probably would be good. I don't know how much liquidity they have on all of them. But I think it's a pretty sleek protocol. And again, it's a confirmed airdrop. So you know that you're going to get something back at least. Another protocol, another perpdex you can look at is Avantis. They allow you to trade a variety of assets with up to 100x leverage on Base. And they both have a perpdex and they have an earn section. And so the way that this works is if you go to their webpage, then they have this earn section here where you can lend out funds to their dynamic risk return vaults. And by providing liquidity to traders, you can earn a base APY of 38.19% on the junior tranche or 18.15% on the senior tranche. And the thing I would note is even though you're depositing USDC, first off, the vault is full right now, so you'll have to wait for the vault to open before you can deposit anything. But if you're able to deposit, even though you're depositing USDC, it's not risk-free because you are providing liquidity to traders. And so if something goes very much wrong, for example, you're kind of betting against traders here, right? If the traders suddenly all start winning for some reason, then you are taking on that risk. And that's especially true with this junior tranche, which is why the yield is so much higher. But keep that in mind. Again, if you're willing to take on that risk and you think the APR is worth it, then I think that there's a good chance that you're qualifying for an airdrop here. And because there's a cap on the liquidity, I think this one's relatively underfarmed as well. Final airdrop that I'm looking at on Base is a potential Farcaster airdrop. Farcaster is a social network, kind of like Twitter, but with some interesting twists. And a lot of the Ethereum community has switched to using Farcaster. And one thing I would know is this one, I'm less confident that they're actually going to do an airdrop than some of these other DeFi protocols. And there is actually already a community token called DGen that people are treating as the proxy Farcaster token. But if you want to keep up on crypto, want to try the latest things anyways, I don't think it hurts to try out Farcaster. And the main front end people are using for Farcaster is known as Warpcast. So I'm not going to go do a full tutorial on how to set up Farcaster in this video. I think also if you've set up a social media account, you can probably figure it out. But if you want more details, information on Farcaster, feel free to drop a comment and maybe I'll make another video about it. And that's all for this video. If you want more information about DeFi, airdrop farming strategies, and more, be sure to check out my newsletter at dynamodefi.substack.com. A lot of the things I talk about in these videos, I talk about weeks or even months before in the newsletter, so you can get the information ahead of time if you go there. For example, here I was a few weeks ago talking about Base deposits. And for more videos like this one, be sure to like and subscribe. Until next time, this is Dynamo DeFi.